Good morning, hello and welcome to Money Control's live stream. You're tuned into a fresh new edition of Opening Bell with me, Lovisha Darad. Well, we are back with a fresh week and after the weakness that the Lal Street saw on Friday, the picture seems to be a bit different today because we did see a good rally and a good session for the Wall Street that came in on Friday after New York Fed President supported rate cuts for the month of December. But yes, now the Fed will be meeting during 9th and 10th of December and there has been a division between the officials whether or not to go for a third straight rate cut after we did see a rate cut in the month of October as well. But yes, now all eyes will be whether the Fed opts for a 25 basis rate cuts in the next meeting. But yes, the Wall Street seems to be quite in a cheery mode on Friday and we did see Dow rising by about 100 points. Then we had Nasdaq also rising by about 200 points in the Friday's trading session as well. And yes, taking cues from the Wall Street, Asian markets have also started the day on a positive note where we did see South Korean markets did well. Kospi index was up nearly by 1% in today's trading session. Australian markets were also in the green, but Japanese markets are closed on account of holiday as of now. Now going into the week, we'll be seeing some of the economic data which will be coming from the US. We have the producer inflation data, retail sales, and then we have industrial production data, and we also be having the third quarter GDP print from the US as well. We'll also be having our own GDP print in the for India as well going into this week. So we'll be watching out for that macro standpoint as well. Now, markets will be watching for any signs of this moderation in the labor market because any of these softer readings could strengthen further expectation and a policy easing by the US Federal Reserve as well. So we'll watch out how all of these cues will impact our own markets. Of course, we did see on Friday that rupee hitting low. We'll understand whether or not, the currency depreciation continues to take place and how it is going to impact our own equity markets as well, which we will be understanding from our experts as well. So keep posting your stock related queries also. We'll get to them in a bit. And for now, let's quickly take a check of the top headlines, sir. Stocks on Wall Street end Friday's trading session higher and a big market rebound after Fed officials suggest that the central bank could cut rates in the month of December. The Dow gains 100 points while Nasdaq was up 200. Markets in Asia Pacific open higher, reflecting cues from Wall Street on revived Fed rate cut hopes. Meanwhile, the GIFT Nifty is indicating a positive start for our own markets. Crude oil prices extend losses for the fourth straight day amid possibilities of a Russia-Ukraine peace deal. Gold prices, meanwhile, are steady as traders ramp up December rate cut bets. And Royal Enfield enters its 125 year. In an interview with CNBC TV 18, the CEO says that they grew 50% year on year in the festive season owing to the GST cuts, adds that the motorcycle industry is growing at 8% and the growth momentum will continue. And Commerce Minister Piyush Goyal tells CNBC TV 18 that the first phase of a potential India-Israel FTA will kickstart benefits faster for both the economies. He highlighted that R&D is a key thing for future collaboration, and on talks with the US and EU, the minister said that the negotiations are on a case-to-case basis. All right, in the last trading session, we did see weakness from both the headline indices. Despite both of the headline indices did post weekly gains, but we did see Sensex falling by about 400 points. Nifty also fell by about 100 points and fell below that 26,100 mark as well. Banking heavyweights, which was your HDFC Bank and ICICI Bank, also led the decline in the markets. And among the sectoral movers, it was the PSU banks and metals and realty, which were the top drags because given them the market breadth also turned weaker in the last trading session. We also saw that the IT stocks slipped after weakness that emerged in US tech despite the Nvidia's beat on earnings. But yes, broader end of the markets, both the mid-cap and small-cap indices extended deeper into the losses. But yes, so we did see that the rupee had slipped to a fresh record low at a point 88.83 rupees amid the global risk off. We'll watch out how the currency reacts today in today's trading session as well. But yes, from the fund flows data, FIIs, they stood as net sellers, sold stocks which was worth about 1,200 crore rupees in the cash markets. DIIs, they stood as buyers, bought stocks which was worth about 1,700 crore rupees in the cash markets itself. Nifty put call ratio falling to about 1.03 from 1.44, and the stock that continues to be a part of the F&O ban, that is your SAIL and Sammaan Capital. Both of them continue to be a part of the F&O ban list as of now. But yes, let's take a quick check of where the pre-open rates stand off as of now. If you look at Sensex, very mild start it has been indicating, up by about 88 points. Nifty also above that 26,100 mark as of now. But we'll understand how the trade setup looks like with our technical expert of the show. Joining me is Rajesh Palviya, Senior Vice President Research at Axis Securities. Rajesh, good morning. I mean, last week we did see Nifty at about 52-week highs, but of course, those gains got fizzled out. And what are the next levels that we should watch out for now?
Good morning. So Nifty is now almost trading around 26,000 level, and we are just about to end this November series on a positive note compared to the previous series. On a weekly chart, Nifty has formed a bullish candle, but still on the both side we have a shadow, which clearly shows that there is a indecisiveness amongst the trading participant at this juncture. Breakout about 26,200 could initiate a more short covering action till 26,200 not taken out by the Nifty. I think we may see some consolidation for a brief period of time. Maybe it could be a range of 25,850 to 26,200. It's a broader range for next couple of days. So either side breakout will decide the major direction at this juncture. Though Nifty is holding about 20-day moving average, so near-term strength is still there. There could be some profit booking ahead of this monthly expiry. So we need to watch out how this rollover data pans out. But still, FIs are on the sell mode, so that needs to watch closely what kind of intensity they have on the selling side going forward. So that could create some pressure at this juncture, but still 26,200 is still having major call concentration area, so that level needs to cross for to continue further more upside. Bank Nifty is looking promising. The way Bank Nifty is holding the strength, this is the third consecutive week where Bank Nifty has formed a higher high-low formation. So that's a sign of sustained buying action, and confidence is there on the banking as well as the NBFC stocks from the market participant. So looking at the setup, we believe that till Bank Nifty is holding above 58,650, 58,700 mark. I think here trend is likely to exhibit on the bullish side, and once Bank Nifty again manages to cross above 59,100, we could see good short covering action, and then possible rally can extend to 59,500 also. So Bank Nifty is looking one notch better compared to Nifty. So here one can hold their long position even in minor dips. One can try to initiate a long position in Bank Nifty, and we believe that momentum can extend further.
Okay, all right. But Rajesh, what about the broader end of the markets? Because they showed signs of fatigue last week. Can we expect this trend to continue?
So I think this generally happens when you are almost near to your all-time high trajectory, almost after consolidation of 13, 14 month. Now Nifty is trying to breach its previous all-time high trajectory. So I think some profit taking would be there around those levels. So maybe we could see some more consolidation or some profit taking in broader market also. But overall structure is still bullish, so we believe that after a breather we could see again resumption of rally. Trade deal is the important news flow which market is waiting for. So how these pans out would decide the major direction from here onward. But we believe that after a brief consolidation or some breather, yes, broader market may also start recovering going forward.
Okay, all right. Rajesh, let's also talk about IT stocks because they did well last week. What are we expecting this week? I mean, we did have a positive brokerage note that came in from Motilal where they've upgraded Infosys as well. And then we have Wipro also getting upgraded from sell to a neutral rating. So, there's a little consensus buy which is emerging in the IT pack. But from a technical perspective, what are we expecting from the IT index? And anything that you're liking from the basket?
Yeah, so Lovisha is still, large cap IT still in a consolidation mode, but mid cap IT is looking more attractive compared to the large cap IT. Most of the mid cap IT stocks managed to give breakout on their near term, short term structure. So I think if market stabilize at a certain level, I think mid cap IT stocks can do well. So stocks like Persistent, LTI Mindtree, one can keep on their buying list. Here we could see good traction going forward. So already breakout is already visible in this counter. So persistent is our choice at this juncture. And we believe that, here we could see good traction. But on the large cap IT stocks, I think TCS one can focus on. Stock is now negotiating with its multiple supply zones. So any breakout above 3180, 3190 can take stock higher to 3250 on the higher side. So maybe mid-cap IT stocks one can keep on their buying list at this juncture.
Okay, mid-cap IT stocks. We'll watch out how the mid-cap IT firms also react in today's trading session. But yes, the first rates coming on your screen where Nifty has opened above that 26,100 mark as of now. Very mild start to the markets, but still we are in the green as of now. 32 points uptick coming in for the benchmark index as well. Sensex also starting the day in the green with about 100 points gain. 0.1% gains coming in for the Sensex as well. And if you look at the Nifty mid-cap index, that is showing a little bit of a recovery from the last session. But yes, it's a flat to a positive start for the Nifty mid-cap index as well. If you look at the small caps, also showcasing a very mild set of gains, 0.1%. And if you look at in the sectoral perspective, it's we did see that the metal index had seen some selling pressure in the last trading session, but it has opened mildly in the positive terrain. On the other hand, if you look at Nifty Auto Index, that is also open in the positive territory. If you look at Nifty IT Index, like we were talking about, 0.5% gains coming in from the IT pack as well. On the other hand, if you look at Nifty Realty, PSU Banks, they've opened very quiet in today's trading session. If you look at on the losing end, it's the media stocks which has been under selling pressure for today. So yes, we'll be watching out for these sectors as we go into the trading session as well. But yes, good moves coming in from the India VIX, which has cooled off by about 5%. I mean, all in all, there is some bit of a stability which is creeping in the markets. But yes, coming to the top gainers and losers of where we stand, if you look at IT stocks, they have been dominating the Nifty 50 gainers list. Tech Mahindra leading the charts with about 0.5% gains. TCS also doing well with about 0.4% gains. And if you look at the others, for instance, you have Hindalco also doing well with about 0.5% gain. Dr. Reddy's Lab, ICICI Bank, some of the other gainers on the Nifty 50. ICICI Bank definitely, taking a rebound after we did see a larger selling pressure coming in from this banking heavyweight as well. Let's take a look at the top losers on the Nifty 50 then. We have Reliance Industries, which is losing in the trade, a 0.3% decline coming in for this big boy. SBI Life also showcasing a decline of about 0.2%. Trent, Apollo Hospitals, Cipla seeing a little bit of a setback and of course under the selling pressure as of now. But yes, Rajesh, coming back to you, metals, of course, last trading session we did see a huge amount of selling pressure. But given the kind of rally the sector has seen, does this mark the beginning of consolidation?
Yeah, we believe that most of the metal stocks have witnessed some profit taking at higher level. So maybe yes, we could see some consolidation, though still medium term to long term structure is still holding the strength. So I think maybe we could see some brief consolidation in this space. Maybe some profit taking would be there. If I analyze the stocks from this metal space, so I think some of the stocks like National Aluminum and Vedanta, these two stocks are still holding the strength on the near-term chart also. So once market stabilize at certain level, I think one can focus on these two stocks where again we could see a good recovery going forward. So Vedanta, if you get opportunity around 485, 480 zone, it's again good level to re-enter in this counter. On the downside, 470 needs to keep as a stop loss. Again, on the national aluminum stock is almost trading near to its 20-day moving average. So 245, 246 is the good level to again, buy national aluminum also. But we believe that, till stock is trading about 242, trend is likely to exhibit on the bullish side. And once stock crosses about 260, we could see good pullback towards 270, 75 zone also.
Okay, all right. All right, let's talk about some of the individual movers. We'll talk about Tata Power first. The stock is flat. However, we did see that the company has signed a commercial agreement with Druk Green Power Corporation to develop Bhutan's, a hydropower project as well. But yes, the stock has been quite sideways so far this year as well. But yes, Rajesh, how does the stock look like to you on the charts? 0.4% gains today, right now.
So I think if I analyze the medium term to short term structure, stock is still in consolidation, and we believe that this consolidation is likely to be there in this stock prices. Stock is trading in a range of 415 to 365. This is the broader range for the stock since last couple of months. So until the stock not crosses above 415, maybe we could see more consolidation in the range itself. So those who have patience, those who can wait for a little longer period can buy and accumulate, or trader should wait for breakout of 415. Once stock crosses above 415, then we could see a good rally to unfold towards 440, 460 zone.
Okay, all right. That's the view coming in for Tata Power. Let's take some of the viewer query that is dropping on our live feed as well. The first query coming in from Dheeraj Sharma, where he's asking whether one can enter Canara Bank at the current levels, given that it is at an all-time high. Of course, in the past 1 month also, we have seen a good upsurge coming in for the stock as well. 16% gains for Canara Bank. Rajesh, how does this chart look like? I mean, can we expect, the stock to see further rally?
I think stock is showing strength, and yes, some profit taking was there, mild profit taking we can say from higher level, but still looking at the overall structure, we believe that as PSU banking basket is looking attractive, and Canara Bank is one of the outperforming stock from same basket. We believe till stock is trading above 140, 42 level, one should use any minor decline as a buying opportunity, and on the higher side, 155 is the immediate hurdle. Once his stock crosses those level, then next target towards 165 to 170 we could see on a short to medium term perspective. So yes, buy and accumulate would be the strategy for Canara Bank.
Okay, buy and accumulate for Canara Bank then. Let's take another viewer query. We have Naveen who's been asking the view on Loris Labs and what are the entry levels he's asking you could suggest. Rajesh, of course, so we've seen that the stock has seen a good upsurge, of course, and Q2 results was also quite promising. But from an entry point of view, what would you suggest?
So I think stock is in clear uptrend. If we analyze the weekly, monthly chart, stock is moving in upsloping channel. Yes, there is was some profit taking in last couple of days, but still stock is trading and hovering around its 20-day moving average support area. So 980 to 970 is a good level again, to buy and accumulate this counter, as overall structure is bullish. We believe that till stock is trading above 970, trend is on the bullish side, and one can buy and accumulate at current level with stop loss of 960. On the high side, 1010 is again near term supply zone. If it crosses 1015, we could see again new all-time high trajectory for the counter also. So, and possible target towards 1100 we could see on a positional perspective. So here also one can deploy some long trade. On the decline also one can add, keep a stop loss of 965 whatever you are buying in this decline.
Okay, all right. 1100, that is the next target that we could watch out for Loris Labs as well. And 965 is the stop loss for it. Right, with that, let's move on to our next viewer query. We have Rajat Das, who's been asking the view on SBI Life on how it looks like at the current levels. We did see in the last trading session that the stock hit record high levels as well, Rajesh. But today the stock is seeing a little bit of a pullback, 0.3% cut. What would you suggest, SBI Life?
So overall, structure is bullish. In the previous week, also we have seen that stock has managed to give breakout on the brief consolidation. Though there is some profit taking at higher level, but still we believe that till stock is trading above 1980, 1990 level, one can use this minor decline as a buying opportunity. We believe that once stock crosses about 2030 level, the next target for the stock would be around 2100 also. So buy and accumulate would be the strategy. Stock is holding the strength across all time frames, so one can uh, deploy fresh long trade also, or those who are already holding can hold the position.
Okay, all right. Hold the position for SBI Life. Then let's move on to our next viewer query. We have Naveen who's been asking the view on Bajaj Finance because he's been holding the share at about a stock price of 1050, and he's asking that whether or not to hold or exit the particular counter. Right now, the stock has been trading nearly to about 1000 odd levels. But yes, Rajesh, he's seeing a bit of a loss. But what would you suggest? Him to hold or exit the counter as of now?
I think if the view is on a positional perspective, so yes, he can hold on the position as overall structure is bullish. Yes, some profit taking at higher level is happening, but still, if we analyze the whole sector, like NBFC banking, these two baskets are clearly in uptrend. So maybe after a brief consolidation or mild profit taking, stock will again show some pullback action, and on the pullback, 1040, are the key supply zone. Once stock crosses those level, then the next trajectory on the higher side would be around 1090 to 1100 also for Bajaj Finance. So buy and accumulate would be the strategy, as he has already bought at higher level, can hold the position. On the downside, 980 needs to watch closely. If it's not 980, if it's not break below 980, I think trend is likely to exhibit on the bullish side only.
Okay, trend is likely to be on the bullish side for Bajaj Finance. All right, let's take one stock in focus. That is your Tata Chemicals. 0.5% gains coming in for the counter after the company did say that it has approved fresh investments to expand its capacities at two major plants. And the company is expected to spend about 135 crore rupees to boost its dense soda ash output as well, which is there in a Meethapur facility over the next 24 months as well. But yes, Tata Chemicals, today the stock has been 0.5% gains. But yes, Rajesh, the stock has been an underperformer so far this year. So can we expect this trend to continue, or what can we expect in the next near term?
I think my advice would be to avoid at this juncture. Still, stock is in downtrend, and if you look at the daily, weekly chart, the stock is continuously making lower high low formation, which is sign of sustained supply pressure is taking place in this counter. In this corrective move, now stock is almost trading near to its critical, support area, which is placed at around 800 kind of level. So any breakdown below 800 can open further more downside, and then possibly stock can slide further to 765 also. So at this juncture, I would recommend here to avoid this counter until the stock not crosses above 845. Trend is remain on the weaker side.
Okay, trend is likely to remain on the weaker side for Tata Chemicals then. All right, let's take another viewer query. We have Digambar who's been asking the view on Daiichi on how the stock looks like on the charts. Of course, the stock has been an underperformer so far this year, and in the past 1 month or even 3 months, the stock has been deep in the red. But yes, Rajesh, what can we expect? The second quarter results also showcased some of the operational struggles that the company has been undergoing.
Uh, can you just repeat again the stock name?
Daiichi,
I think it's already in BSC, right?
yeah.
Okay. Okay, so if I analyze the structure for the counter, it's still stock is in a weak trajectory. Stock is making series of low top, lower bottom formation. Looking at the price action, I think stock is now trading near to critical support area of 245 250 zone. So any breakdown below 245 can open further more downside towards 230 220 also. So my advice would be avoid at this juncture until the stock not crosses above 300 level. That's the major supply zone for the stock.
Okay, all right. Let's take another viewer query also. Right now, we have Alex who's been asking the view on Engineers India on the current levels for a fresh entry. Of course, the stock did see a high in the month of July, but since then, the stock has tumbled by about 20% itself. Rajesh, what's your view on the counter? Any entry levels you would specify here?
So stock is in sideways consolidation only since last 4 5 week. Stock is moving in very tight range. Looking at the near term, short term structure, 210 is the critical supply zone for the stock. So until the stock not crosses about 210, Maybe we could see more consolidation to remain in this counter. On the downside, 180, 85 are the important support area. So 185 to 210 would be the range for some more time. Either side breakout or breakdown will decide the major direction for Engineers India.
Okay, all right. Let's take another viewer query on that note. We have Preeti Singh who's been asking the view on TVS Motors, whether it's a good investment for the medium time horizon or she should switch to Hero MotoCorp. Any views on both of these counters on how they look like on the charts? TVS Motors versus Hero MotoCorp?
So if Horizon is for investment and for long term, so I think TVS Motor is also looking attractive, and it has created a wealth in a longer run. So I think overall structure is bullish. So we believe that TVS Motor can also has potential and can deliver good amount of return going forward. But for trading point of view, Hero Motor is looking more attractive at this juncture as stock has given a breakout on the near-term chart. So for trading point of view, Hero Motor can scale up to the next target of 6250, 6300. So that could be the next target. On the high side, one can hold the position or initiate long with stop loss of 5850. But for TVS Motor, if your view is on positional side, so hold the position, buy and accumulate would be the strategy till stock is trading about 3300. Trend is on the bullish side, and once stock crosses about 3500, we could see good target to unfold toward 3650, even 3700 also.
Okay, all right, 3700 as well. All right, let's take another viewer query. We have Aisha who's been asking the view on Sagility and whether it's a good time to enter this particular counter. Of course, the stock did see a good momentum, but if you look at the YTD charts, the stock has been an underperformer. But the stock did see a good breakout in the month of October itself. But right now, the stock has once again entered a zone of consolidation. Rajesh, what's your view on the counter for Sagility?
So we have seen that multiple times stock has witnessed supply pressure around 55, 56 zone, and which is the immediate and challenging level for the stock. Until the stock not crosses above 56 level, we could see some consolidation in range of 45 to 56 only. Any breakout above 56 can take this stock further higher to 65, 70 zone also. Overall structure is looking positive. So buy and accumulate would be the strategy. On the downside, 45 needs to keep as a stop loss.
Okay, all right. That's the view coming in for Sagility as well. Let's take another viewer query. We have Komal Makhija who's been asking the view on Bharat Electronics for a long-term investment horizon. Bharat Electronics, of course, the stock has seen already a good run-up so far this year. Rajesh, what can we expect in terms of levels?
So definitely she can hold on the position for longer term perspective also. Stock is looking attractive on the long term chart. Though there is some consolidation is happening after this rally, but we believe that on a longer run, yes, stock has potential to extend its gain. 460, 475 would be the next target for the counter once stock crosses over 435 zone. On the downside, till stock is trading above 385, 390 zone, I think trend is likely to remain on the bullish side. So buy and accumulate is the strategy. On the breakout of 435, one can add more position for upside target of 470, even 480 also.
Okay, all right. That's the view coming in for Bharat Electronics. Let's take another viewer query. We have Lakshay who's been asking the view on Vishal Mega Mart because he's bought it at about 136 rupees and he's asking that whether he should hold or sell. Vishal Mega Mart, any views on the counter? He's bought the stock at about 136. Right now, the stock has been a bit lower, 129. That's where it's been trading.
Some profit taking is happening in this counter, and since last couple of weeks stock is in corrective mode. Stock is making lower high low formation on weekly chart, so clearly shows that some sustained profit taking is happening. Though if I analyze on the long term chart, stock is now almost trading near to its important support area of 125, 124 zone. So that level needs to watch closely. If it's break below 124, then I think maybe we could see further more supply to extend, and then possibly stock may slide to 110, even 105 zone also. I think my advice would be wait and watch. Let's wait for 125, 124 level, how these levels defend by the counter or not. If it's not able to hold, then avoid at the juncture.
Okay, all right. Avoid at this juncture for Vishal Mega Mart. Right, let's take another viewer query. That's the last query. That's Solomon who's been asking the view on HDFC Bank because he's been holding and he's seeing a bit of a profit, but he's asking whether he should book some profits or is there any upside left in sight. Rajesh, what's your view on the count of HDFC Bank? Today, the stock has been positively in the green.
I think hold the position as whole banking space is looking attractive. As I mentioned in my opening commentary, also Bank Nifty is also looking attractive. Most of the banking stocks are also showing sign of strength. So I think this whole basket may extend its gain, and HDFC Bank almost trading near to its all-time high trajectory. Looking at the near-term, short-term structure, stock is trading about all its near-term moving averages. So I think 975 needs to trail as a stop loss. If it continues to trade above 975, I think hold the position. Once stock crosses above 1030 zone, I think next target would be around 1100 to 1120 going forward for HDFC Bank.
Okay, all right, all right. That's the view for HDFC Bank. Hold as of now for HDFC Bank. All right, just one last question before we let you go, Rajesh. What are your top picks at this hour? I know we discussed a range of stocks, but anything that you're finding interesting in the markets?
So I think NBFC space is looking promising, and Shriram Finance is our choice at this juncture. Stock is after a decent rally now. Stock is consolidating since last couple of days in a very tight range. And looking at near-term, short-term structure, we believe that stock has potential to extend its gain. Possible target towards 870, 880 we could see on a positional perspective. So buy and accumulate is the strategy for Shriram Finance. On the downside, 805 needs to keep as a stop loss. As I mentioned about mid-cap IT stocks, I think most of the mid-cap IT stocks are showing sign of strength. So from that space, I think Coforge one can look at. Stock has taken the support from its 20-day moving average. So Coforge is looking attractive. 1860, 1880 would be the target. On the downside, 1800 needs to keep as a stop loss. And the third space where we are focusing at this juncture is FMCG basket. That is Tata Consumer is looking attractive. Stock is moving in upsloping channel, and looking at the near term short term structure, we believe that once stock manages to cross above 1195, we could see good rally to unfold towards 1230, 1240 zone. So Tata Consumer is also buy and accumulate strategy. On the downside, 1165 needs to keep as a stop loss.
Okay, all right. All right, those are stocks that we need to watch out for as well. But with that, we have to let you go, Rajesh. But thank you so much for your time and joining us.
Thank you. Thank you.
All right, let's take a quick check of the markets of where we stand as of now. Of course, we did open in the green, and of course, we're still holding on to the green. But of course, it's a very mild set of gains when it comes to the headline indices. Sensex up by about 35 points. Nifty also holding up by about 12 points above that 2600 mark. But yes, of course, it slipped below that 26,100 mark as of now. It's still holding above that 2650 as of now. But we'll watch out whether or not this recovery takes place in the markets, and that's broad-based as well. But yes, for now, the good news is coming from the India VIX because it has been fallen by about 4% itself. And that's why you can see a little bit of a stability in the markets as well, despite some selling pressure which is seen in the pockets of auto, or you can see some of the energy stocks not doing well. On the other hand, if you look at the oil and gas space, that is also seeing a little bit of selling pressure. If you look at the private banks, also succumbing to selling pressure. However, what is doing well, that is definitely your IT stocks, once again extending the gains after we did see that the last week also IT stocks did see some good buying interest. 1.5% gains coming in for the Nifty IT pack as of now. But yes, from the broader end of the markets, if you look at the mid caps and small caps, mid caps definitely outperforming from that basket and showcasing a gain of about 0.2% from the broader end of the markets as well. But yes, before we move on to our next guest of the show, let me introduce you to Money Control Super Pro, which can be your ultimate investment superpower. You can get all the live trading calls, investment ideas from SEBI registered experts, pre-identified chart patterns and AI-powered stock alerts right on your WhatsApp to help you trade and invest with confidence. So download the Money Control app and subscribe to Super Pro. All right, with that, let's quickly move on to our next guest of the show. We have market expert Ambareesh Baliga joining us. Ambareesh, sir, good morning. You know,
Right.
sir, let me start with the first question. Of course, the Fed officials, they have indicated an interest rate cut for the month of December. Of course, till October, it was the consensus that it could not go for another rate cut for December as well. But which camp are you in? Do you see 25 basis points rate cut?
Yeah, there could be a rate cut uh, because I mean they've kept a pause for a decently long time. So I expect a 25 basis points rate cut this time.
Okay, okay. But yes, sir, what about with the yen weakening and the Japanese government is expected to act on this rising interest rates? Do you see that as a next risk for the markets, and how are you expecting the global equities to react to it?
See, that is one risk. I mean, we have seen that in the past also because as and when that happens, you'll have the yen carry trade unwinding. And based on that, we have seen the global markets correcting. So that's one risk to be kept in mind, no doubt. But then when we're talking of India specific, I think one big trigger for India going ahead would clearly be that US-India trade treaty, which was anyway expected by end of November, hopefully should happen in the first week of December. But in case that does not happen, yes, I think the markets can actually top off. So that's the other risk which one needs to keep in mind. I mean, that can be a trigger as well as a risk.
Because what about Nifty? I mean, it was just near the record high levels, but now we have rupee also, which was at lifetime lows for Friday. So how do you make sense of this? And what is the next that the markets could see? And do you believe that this month could be the month for the Nifty to achieve that all-time high levels?
See, that's quite an anomaly, I would say, because see, I mean, you have the Nifty at close to all-time highs. Yes, I mean, because of the triggers which you're talking about, the US-India treaty. In case that happens, we can see Nifty at a new high over the next couple of weeks. But unfortunately, most of the portfolios are bleeding. That's because the small caps and the mid caps, most of the stocks are much below in the levels which you're seeing even the last 3 or 4 months. So unless we see the mid cap and the small caps rallying when the Nifty touches a new high, I really don't see, too much of liquidity coming, into the markets even in 2026. I mean, we have seen liquidity drying off to a certain extent in the last few months. And I think that can continue in case we don't see a mid cap and a small cap rally.
Sir, what about with the earnings season? Now that it's over, does it bring back some conviction into the equities that there could be some double-digit growth for FY27, or how are you viewing this at this point of time?
See, as far as the Q2 earnings are concerned, clearly the expectations were decently muted. And compared to that, whatever earnings we have seen have been a positive surprise. But then, unless we see Q3 reconfirming that, I don't think people will be too enthused as such. But I am expecting that Q3 should be better. Basically, looking at the way the consumption has taken off. And we should remember that in Q2, because of the GST announcement, we had seen some amount of holdback of consumption because that was announced on August 15th and implemented on September 22nd. So people had, held back the major consumption, which started happening more towards the end of September and from October onwards. But then again, most of the consumer companies had issues with the GST chain. So I think there was a lot of adjustment done there. I mean, which also reduced margins to a certain extent. I think all that will be set right in the current quarter, which is Q3. So I'm quite hopeful and expecting that we should have a decently good Q3. So if that happens, yes, I mean, you could see most of the consumption stocks continue to do well.
Okay, okay. But what about the auto space? I mean, now, we've seen that in the past, following the GST rate cuts, the sector has rallied quite a bit. But do you believe that the majority of the positive factors that has already been priced in the stock, or do you see a further runway as well?
No, to a large extent, we have priced in. We have seen most of these stocks moving up very well. But then I think at least the next 1 or 2 quarters, we should continue to see the numbers improving, and especially I'm talking the monthly numbers improving.
Okay, okay. Baliga sir, let me also shift focus to the IT sector because we have seen quite a bit of a rally, and of course there's a little bit of a consensus upgrade when it comes to IT stocks after the second quarter results. But for you, despite the cheap valuations, do you see there is some bit of a growth visibility after the second quarter performance?
Again, there's a hope, and I think that can be confirmed post the Q3 numbers and Q3 management commentary. I think that's what one should be waiting for. And I think the other small trigger for the IT space clearly was the rupee depreciation. Because, see, I mean, normally when the rupee depreciates, we say is extremely good for the exporters. But this time it's a bit different because most of the exporters are still reeling under the tariff issues. And that 1 or 2% sort of a fall in rupee I mean, does not really make up for the tariff issue which is there. So, except for I mean, sectors like pharma, a couple of these food and spices exporters where they got some relief recently from US. I think these are the sectors which can benefit because of the rupee depreciation and surely IT. And I think because of which we are seeing some sort of a move in IT space.
Okay, okay, all right. What about, let me talk about defense stocks also because at the current juncture, because in the second quarter, we did see some FIs also trimming some stake for majority of the defense stocks. But for you, how do they look like? I mean, do you still see a growth visibility, but the valuations have run up quite a bit? Or how should investors approach it going as a theme going ahead as well?
I've been maintaining this for a long time. That I mean, if you're talking of growth in defense, I think it's going to be a fabulous growth if you're talking of the next 5 to 10 years. But at the same time, we need to understand that there can be execution issues. And we are seeing that to an extent. I mean, if you're talking of, I mean, HAL, if you're talking of, I mean, it was quite unfortunate that that accident happened last week. And if you're talking of the shipbuilders, I mean, there's an issue as far as the capacity is concerned, and the capacity cannot be increased overnight. I mean, you can have orders multiplying overnight, but capacities cannot be added. I mean, some of them still, I mean, have their capacities booked for the next 10 to 12 years. So, I mean, taking in new orders and getting it executed could be an issue unless we see that the capacities, I mean, they are able to garner capacities or buy out capacities. So unless that happens, I think one has to wait and watch for a while because most of these stocks have run up decently well. If you're talking the last couple, I mean, 3 4 years, most of them have become multi-baggers. And despite the sort of a correction which you've seen in the last 1.5 years, they're still decently expensive. So execution risk is something to be looked at, and one should be a bit cautious at this point of time.
Okay, okay, okay. But from a sectoral perspective, Baliga sir, what is something that you would advise investors to remain on the sidelines for the time being?
No, like I said, defense would be one of them for sure. I mean, otherwise, if you're talking of most of the other sectors, if you're talking of pharma, if you're talking of automobiles, if you're talking of consumption overall, I'm decently bullish.
Okay, okay, all right, all right, all right. All right, but now that we also have, I mean, the earnings season has gotten over and we have some potential trade talks from the India-US front. I mean, are these the next triggers or is this something that the markets are yet to price in as of now?
No, I think these are the major triggers. And like I said, I mean, this is more technical than fundamental. That unless you have the small cap and the mid cap starting to move, I mean, once they start moving, you'll automatically have a lot of people getting in because of the momentum. And unless that happens, retail participation, which has been the driver for the markets in the last years, I think that will take a hit because most of the retail is invested in the mid cap and the small caps. And if they are not making money there, money flow into the equity markets can, I mean, halt for a while. I think I'm more worried about that than anything else, and that's more technical in nature because most of these stocks have corrected decently well. Valuations, I won't say, are too expensive like what we had seen about a year back. So we need to see some movement there, and I think that can, I mean, carry the markets in 2026.
Okay, okay. But Bariga sir, we have seen that the small cap space have seen quarterly declines and of course quarterly downgrades when it so to say. So, I mean, from this second quarter, is there some confidence back, or is it just going to be another pocket that investors are going to stay wary of?
No, I mean, as of now, investors are wary of the small cap and the mid caps. Like you
Mm.
rightly said, I mean, if you take into account some of the earnings where there have been disappointment, if you're looking at, like I said, the portfolios overall have been bleeding in this space. I mean, in case we see a decent sort of uptick in Q3, which I'm hopeful of, I think that could be one of those triggers to start the movement in this space.
Okay, okay, all right. All right, Baliga sir, with that, we have to let you go, but thank you so much for your time and joining us.
Thank you.
All right, let's take a quick check of the market. So where we stand, of course, it's been a mild set of gains. We're starting off the week on a positive note as of now, but Sensex is up by about 40 points. Nifty is also up by about 15 points above that 26,080 mark as well. On the other hand, if you look at from a sectoral perspective, it is the Nifty IT stocks which has seen the majority of the buying interest for today. On the other hand, if you look at autos, they are reeling under the pressure as of now. If you look at FMCG, also a bit mildly in the red as of now. On the other hand, pharma pockets has been also seeing a bit of a selling pressure. Realty stocks also bleeding in the trade as of now. So all in all, it's definitely the IT stocks which has been bucking the trend in an otherwise, very sideways market, so to say, as of now. But yes, with that, we have come to an end of this edition of Opening Bell. Don't forget to tune in at 3 o'clock for closing, and we'll understand how the market is developed with our experts, and we'll also be discussing the stocks that have grabbed the headline. So until then, signing off, do stay tuned to moneycontrol.com for all the news updates and market insights.